Welcome to TradeTheMBA.com. This is John. This reports for the 24th. Well, it continues. We're just pushing back up towards those highs. I mentioned it's still riding clean, not a whole lot of short activity. Pretty much, riding the potential rise of where things will be inflationary wise going forward. Still very confusing to process the idea the Fed cut 50 basis points and at the same time says the economy's healthy, markets at record levels, and from their viewpoint, employment, everything else is super rosy. So what was the justification for that? In fact, you're only going to spike inflation with it. So either they were lying about the data in the first place, which we kind of know is true, but at the end of the day, very negative impact for future growth, that's for sure. It's definitely going to be saving the budget as far as the deficit spending, but here you look at the NQ continuing to push. Same readings now, so we're back into congruence with the NASDAQ and the S&P, but when you look at it from a broader perspective of, yes, that's going to save some money for the Treasury, which is only fueling them to spend more money in deficit spending, and your interest charges fine will be dropped, but they're just going to spend the money anyway, so it's not like there's any fiscal restraint that's going to stop that. And then what will the Fed do? Have to go to zero to try and cover the expense of the debt? Well, that would just create a hyperinflation situation. Treasuries yield continuing to drop again. All the excitement bled out of it, and you're still in a negative yield. So they have to increase the yields to attract some attention. And again, that's where you get into the situation of who wants a treasury other than the Fed? Nobody really, for the broadest point of it. You'd rather be in commodities or something else, which is why oil is going to continue to rise, whether there's demand for it or not. You see China, major intervention in their economic situation because the broader U.S. consumer is fading, and that's always your early warning sign. When China starts to see trouble, they're having issues globally for trade. Euro still benefiting from the cheaper gas, but it could be under pressure once we start seeing more of the numbers coming out of the Eurozone. The runaway winner, obviously, gold continuing, and it's not going to stop. The demand for it is just going to accelerate exponentially, and I think that again, like I said, for those that don't want the physical weight of gold, are going to move towards the crypto market, and you're going to see them have a secondary fly up. Of course, there's issues with those and the fees and electricity costs and that. My 50K chart just rebooted everything again. Here we had the intraday was ugly. It was just all over the place, and this is part of the getting to know you phase of where we're at and what do we do with it. And I think the market's a little uncertain within that context because the polls are changing daily. They don't know exactly which direction is up, and that kind of confusion means you're rotating from sector to sector to try and figure out where the best place to be is, and that's not necessarily creating anything golden. So we're just getting a play back and forth, and I think we're just going to continue to get a little bit of that lopsided awkwardness before we start to move out towards the uprun for election, which happens in general. So that's the long and the short of it for now. As always, trade well. Anything relevant, I'll put on the Skype chat. Have a good one.